Do you want to become a millionaire in 2024? Well, who wouldn't, right? But to get there, you need to avoid some common investing mistakes. As we navigate the world of investing, it's important to remember that knowledge is power. The more we understand about how investing works, the better equipped we are to make sound decisions. Yet, even seasoned investors can fall into traps. It's easy to be swayed by the promise of quick returns or to let emotions cloud our judgment. Sometimes we might neglect to diversify our portfolios or fail to understand the true value of patience in the investing game. These are just a few examples of the pitfalls we can encounter on the path to financial prosperity. The good news, these mistakes are avoidable. By recognizing them and understanding how they can impact our investments, we can steer clear of these common pitfalls and set ourselves up for success. Now let's delve into these 20 investing mistakes that you should avoid. Mistake number 1, not having a clear investment goal. Sure, we all want to make more money, but without a specific objective, it's like setting sail without a compass. Whether you're saving for a new home, retirement, or your child's education, having a clear goal will guide your investment decisions and keep you focused. Moving on to mistake number 2, not doing enough research. Investing is not a game of luck, it's a game of strategy, and just like any game, the more you know, the better your chances of winning. You wouldn't buy a car without doing some homework first, would you? The same principle applies to investing. Understand the company, its business model, its market, and its financial health before you put your hard-earned money into it. Next up, mistake number 3, emotional investing. Let's face it, we're all human, and we're all prone to letting our feelings get the best of us. But in the world of investing, emotions can cost you dearly. Fear and greed are the 2 most common culprits. So stay calm, stay rational, and remember, investing is a marathon, not a sprint. On to mistake number 4, not diversifying your investment portfolio. As the old saying goes, don't put all your eggs in one basket. If you invest all your money in a single stock or sector, you're exposing yourself to unnecessary risk. Diversification is the key to managing risk and achieving long-term growth. Lastly, mistake number 5, ignoring fees and taxes. Every dollar you pay in fees or taxes is a dollar less in your pocket. So be mindful of the costs associated with different investments. And don't forget about taxes. They can take a significant bite out of your returns if you're not careful. Remember, avoiding these mistakes is the first step towards smart investing. Moving on to mistake number 6, trying to time the market. This is a common pitfall, even for seasoned investors. The market's fluctuations are unpredictable, and attempting to buy low and sell high consistently is a strategy fraught with risk. The best approach to investing is a long-term one based on sound research and well-considered decisions, not impulsive reactions to market swings. Now, on to the 7th mistake, following the crowd. It's easy to get swept up in the latest trends or hot stocks, but remember, just because everyone else is doing it doesn't mean it's the right move for you. Investment decisions should be based on your individual financial goals and risk tolerance, not on what's trending. The 8th mistake is a lack of patience. Investing is not a get-rich-quick scheme. It requires time and patience. Rome wasn't built in a day, and your investment portfolio won't be either. It's essential to understand that wealth accumulation is a slow and steady process. Neglecting inflation, that's mistake number 9. Inflation can eat into your returns over time, so it's crucial to factor it into your investment planning. Ensure your investments are generating a return that outpaces inflation to maintain your purchasing power in the future. Lastly, mistake number 10, overconfidence. Confidence is good, but overconfidence can lead to risky decisions. It's important to stay grounded and realistic about your investment capabilities. Remember, even the most experienced investors make mistakes. It's how you learn from them that sets you apart. Keep in mind that patience and individual judgment are paramount in investing. Mistake number 11, not reviewing your investment portfolio periodically. It's like planting a garden and forgetting to water it. Your investments need attention. They need to be reviewed and nurtured periodically to ensure they're growing and evolving with your financial goals. If left unchecked, your portfolio can become unbalanced and riskier than you may be comfortable with. Sliding into mistake number 12, investing in something you don't understand. The world of investing is vast and varied, with numerous types of investments and strategies, but just because something sounds good doesn't mean it's right for you. If you don't understand it, don't invest in it. It's that simple. A solid understanding of what you're putting your money into is essential for successful investing. Next, we have mistake number 13, not considering the risk-reward ratio. Every investment comes with a level of risk. Some investments have high risks but also high potential rewards, while others are lower on both ends of the spectrum. It's crucial to understand this ratio and make sure it aligns with your risk tolerance and financial goals. Moving on to mistake number 14, ignoring the impact of compounding. Albert Einstein once called compounding the eighth wonder of the world, and with good reason. It's the process where your earnings generate even more earnings over time. Ignoring the power of compounding can slow your path to becoming a millionaire. Lastly, mistake number 15, not having an emergency fund. Life is full of unexpected events, and without an emergency fund, you may be forced to liquidate your investments at inopportune times. Having a safety net in place protects your investments and gives you peace of mind. So there you have it, mistakes 11 through 15. Each one a potential pitfall on the road to becoming a millionaire by 2024. But remember, investing is not a sprint, it's a marathon. It requires patience, knowledge, and a clear plan. A little knowledge and foresight can go a long way in investing. Mistake number 60, not rebalancing your portfolio. If you're not periodically adjusting your portfolio to maintain your desired level of risk, you're making a grave error. As market conditions change, so does the balance of your investments. A portfolio left unattended may tilt heavily towards one asset, leaving you exposed to unnecessary risk. Regular rebalancing is therefore crucial in maintaining your investment strategy. Rolling into mistake number 17, dismissing professional advice. While it's admirable to take the reins of your investments, dismissing the advice of professionals can cost you dearly. Financial advisors, with their wealth of experience and knowledge, can provide valuable insights to guide your investment decisions. Even seasoned investors can benefit from a fresh perspective. Mistake number 18, putting all your eggs in one basket. It's a classic adage, but one that rings true in the world of investing. Diversification is your safeguard against risk. If you pour all your money into one stock or one sector, you're gambling, not investing. Spread your investments across various assets to protect against sudden downturns in any one area. On to mistake number 19, not investing for the long term. Short-term gains can be seductive, but real wealth is built over the long haul. Investing is not a get-rich-quick scheme, but a marathon that requires patience and perseverance. It's the power of compound interest that turns small, regular investments into substantial wealth over time. Finally, mistake number 20, not learning from your errors. Nobody's infallible. Even the most successful investors have made mistakes, but what sets them apart is their ability to learn from those mistakes and adjust their strategy accordingly. Remember, failure is not falling down, but refusing to get up. Remember, everyone makes mistakes, but the key is to learn from them. So don't be disheartened if your investments don't always go as planned. Learn, adapt, and keep moving forward on your journey to financial success. So, those were the 20 investing mistakes that you should avoid. As we wrap things up, let's revisit the solutions that can help you steer clear of these pitfalls. Setting clear and realistic goals is paramount. These goals will guide your investment decisions and keep you on track. Next, doing your research is non-negotiable. Understand the market, the industry, and the specific companies you're interested in. Knowledge is power, as they say. Diversification is also key. Spread your investments across various sectors to mitigate risk. Remember, don't put all your eggs in one basket. Patience truly is a virtue in investing. Resist the urge to jump in and out of investments based on short-term fluctuations. Investing is a long-term game. Moreover, always consider the risk-reward ratio. High returns often come with high risks, so balance is essential. Lastly, learn from your mistakes and those of others. This is how we grow as investors. Avoid these mistakes and you're well on your way to becoming a millionaire in 2024. Remember, the journey to wealth is a marathon, not a sprint.